goes. And then Hillary Clinton is going after capital gains. Roll tape.
Any gains from selling stock in the first 2 years would be taxed just like ordinary income. Then the rate would decrease each year until it returns to the current rate. This means that from the moment investors buy into a company, they'll be more focused on its future growth strategy than its immediate profits.
All right, joining us now is former FDIC Chair Sheila Bair, knows a thing or two about Wall Street, the markets and regulation. Sheila, welcome to the program. Good to have you with us.
Thank you. Thank you for having me.
You just heard what Hillary Clinton had to say. My interpretation is, okay, tax the rich. She wants to use rich people as a source of more government revenue. I got that. She wants also, it seems, to make you hold your investment for a longer period of time. So you're a longer-term investor. Do you think that raising the capital gains tax rate will do that?
Well, no, I'm not sure that the tax rate really influences. I agree with her. I object to this, what she's calling quarterly capitalism. I think our markets are far too focused on quarterly returns and not long-term growth. That's a symptom of investor behavior. I'd like to see change, but maybe they need to figure that out by themselves. I don't think tax policy really drives it. And I think this just adds to a lot more complexity to a tax code that's already highly complex, and I don't think it's really going to attack the behavior that she wants to change. It's not the right tool.
Would you carry, and I'm sure you've worked with Hillary Clinton when you were in administration. I mean, do you regard her as basically anti-Wall Street? Or is she kind of, no, is she,
Yeah.
Well, you're laughing.
No.
Why? Why?
Well, I don't think she's anti-Wall Street. I think, I think what she's suggesting is very incremental. She wants to get rid of carried interest. Well, who doesn't? Nobody tries to defend carried interest. So I think actually her proposals have been quite modest and incremental. So I think to tag those as anti-Wall Street is not accurate. I think more fundamental changes, like much higher capital requirements for large financial institutions, that would be dramatic and have a truly stabilizing impact. Yeah. This is just working it around the edges, maybe perhaps giving a speech that has the appearance of being anti-Wall Street, but I don't think really is, no.
Back in the day, 2007, 2008, at the time, I thought the best thing to do would be to break up the big banks.
Right.
Bring back Glass-Steagall. That's what I thought. I don't think we should have. I think bailing them out was probably the expedient thing to do. Maybe we didn't have that much choice, okay. But in hindsight, I'd really like to see them brought down to size. And if they take any risk, the risk should be borne by the shareholders and not the taxpayer.
Yes.
Are we in agreement on this? Break them up.
Well, I think so. I mean, I think if you significantly raise the capital requirements, the market will force that breakup because it's going to be you're going to make them internalize the external risks that they impose on the rest of us. And so it'll be very, very difficult to make your return on capital with, say, a 10% capital requirement on what's called a non-risk-weighted basis, which is about double what the requirement is now. So I think we probably have mutual objectives. I would be fine with restoring Glass-Steagall. It didn't get any political traction during the Dodd-Frank debate. Another way to do it, which I think the regulators are moving towards, is to require these banks to do something called subsidiarize, so have strict firewalls between their investment banking and the derivatives dealing, which is much higher risk. And if you're going to let them have insured deposits, then keep that to lending. You can get in trouble lending, but it's a well-understood risk. The contribution to the economy is clear. And have all this other stuff firewalled off from that safety net.
Here's where I think we probably agree entirely. Wall Street is still wildly unpopular. We agree on that?
Yes, they are. Yes, I absolutely agree with that.
Rightly or wrongly.
And they don't seem to care. They don't seem to care. That's what I worry about. They just, and now they're
shrinking,
attacking.
Sheila. They're shrinking. I mean, good story the other day about Stamford, Connecticut has lost the world's largest trading floor because the two banks that ran it are just shrinking rapidly.
Go ahead.
Look, I'm sorry. I wish we had more time. You know what you're talking about in this area, and we welcome that. So come on back at some point, would you please?
Okay, I will be happy to do that. Nice
you got a deal. Sheila Bair, everyone.
Okay.
Thanks very much.